Nalco climbs as fourth quarter numbers beat estimates. The EBITDA for the company for a quarterly level comes in at the highest since March 2022. The stock also is out of F&O ban, further bolstering the up move.
United Spirits has shares. The management in its post-conference call guides for double-digit volume and revenue growth for FY25 for its prestige and above brands.
Inox Wind and Concord Biotech both slump on the back of large trades. Meanwhile, shares of Timken zoom after 6.5% equity changes hands.
Well, Natco Pharma climbs close to around 3.5% in today's trading session, despite reporting quarter 4 numbers which were below estimates, as Revlimid generic contribution drives its earnings. Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. And if you look at the top of our screen, well, you'll see the headline indices are doing quite well. The Nifty is up, the Bank Nifty is up, but your portfolio may not be feeling too good because we have more number of stocks that are declining in comparison to the number of stocks that are advancing. So the ratio right now is around 1,400 stocks down to around 850 stocks that are up. Mangalam, I think a bit of a sideways move is par for the course ahead of that big election verdict. In the next 5 sessions, we'll have that verdict with us. For the time being, maybe some consolidation is what the bulls will take.
Consolidation is what the bulls will take. I mean, you have the expiry, you have, you have the election outcome. Before that, you have the outcome of the exit polls, and all of that will play out. So, which is why maybe, bulls would take a bit of a pause for breath. But if your portfolio has a couple of these stocks like AB Fashion, that's moved higher at the high point of trade, reports its results today. Jubilant Foodworks has suddenly found some wind beneath its wings. In this week itself, that stock is up around 9%. And then you have a couple of movers from the broader markets in the form of Torrent Power, Aditya Birla Capital, Max Financial and Exide, all of them doing well. But largely, you have more number of stocks which are declining than the number of stocks which are advancing. And that's something that the advanced decline chart should tell you. In fact, that has been the case for the last 3 or 4 trading sessions as well, where even as the markets continue to move higher from, the frontline end of things, the market breadth was either skewed towards decliners or maybe at an even scale itself. So that's something we'll keep an eye out on. But in a market like this, what are the ideas for profit? Let's shift focus to our sessional segment. We get you some ideas for profit coming in from our colleagues at Money Control Pro. Khushbu Rai joins in with a stock that she's been tracking.
Today's idea for profit is Godrej Consumer Products. The company registered broad-based volume growth in the March quarter. The premium categories saw double-digit growth as compared to mass categories like household insecticides, while the acquired businesses saw good traction led by synergies. The high single-digit underlying volume growth target for FY25 will be led by rising penetration and category development. As innovation and sales and distribution network expanded twofold since 2020, the newly acquired businesses will increase the company's total addressable market going forward. In the core home care category, incense sticks have formalized the unregulated market, while the underpenetrated liquid detergent segment saw good growth in the medium term. If we look at the valuation, the stock is trading at a premium valuation of 53 times FY26 estimated earnings. But we believe it offers upside given the sustainable performance in India and Indonesia and a scope to improve margins in the remaining businesses.
All right, that's an idea for profit, but let's talk about the management of a company that joins us now, TVS Supply Chain Solutions, in focus on the back of their fourth quarter numbers. The company's overall revenue grew about 4.5%. However, for the integrated supply business, there was a double-digit revenue growth. We have 2 Ravis with us, Ravi Prakash, who's a global CFO, along with Ravi Vishwanathan, who's the managing director of the company, joining in. Thanks a lot, gentlemen. Both Ravis, we'll address you all as Ravi Prakash and Ravi Vishwanathan when we're directing the questions to you. For the year, if we look at it, we've seen a decline in your revenues. 10,000 crores has come down to around 9,200 crores, but we've seen an improvement in the margins. So let's start with the outlook for FY25, as it were, Ravi. Vishwanathan, that is. If you could give us a sense of what's the growth that you're targeting in both your segments in FY25?
So let me actually qualify that answer first by saying FY24 was a very interesting year from an ISCS perspective. The segment grew double-digit, and it has been a significant growth that we have had over the last 4 quarters on the ISCS side. And looking at FY25, we expect that to continue. We expect to continue double-digit growth on the ISCS segment. If you look FY24 and look at the network solutions segment, Globally, I would say the trade volumes have declined, and that has had an impact on the freight business globally. And this is nothing unique to TVS Supply Chain Solutions. And we've been talking about it over the last few quarters about the suppressed demand, and also the fact that the wars are not helping. The Red Sea situation has also created certain uncertainty. So I would say that when we look forward, we are very bullish about the integrated supply chain solutions. We are focusing really on the profitability of our network solution segment while we continue to look at all of the opportunities for growth. So it's very difficult to put a number on the growth for FY25 for the network solution segment. Our focus really is about to say, how do we make sure that we are growing profitably, ensuring that we are moving all the levers in the network solution segment to deliver profitability, while we continue on the integrated supply chain solution side with double-digit growth. Having said that, I would say that we are very confident with our strategy. Our strategy is really about customer acquisition and customer mining. You can see that our Fortune 500 customer has increased from just about 64 2 years ago to 72 last year to 78 in the year that just ended. So it's a significant expansion of our Fortune 500 customer. Our strategy is really about that. Global accounts, look at selling capability to our customers in the global market that we are present, and then deep mining our customers. And all of that is paying rich dividends when it comes to our overall business, and especially in the integrated supply chain solutions.
All right. Good morning, gentlemen, and good to see you win. So would it be fair to assume that a double-digit growth is something that you all would aspire to do? That's point number one for the entire business. We're talking about the entire business at large. And also, what was encouraging in the past year was that margins have steadily been improving. Do you think that kind of an improvement could continue, going by some of the factors that you just mentioned in your introductory note?
Absolutely. And I think double-digit growth is the focus of the company. And that's our aspiration. We have always spoken about profitable growth. And regarding margins, I think if you look at it, and I'll ask Ravi Prakash to comment on it, if you look at it over the last 3 years, our growth and margins have been significant. Even if you take the revenue, our growth on a CAGR basis has been something which is very impressive. So specific question to answer, yes, and I'll probably have Ravi Prakash give you the details on what we are looking at, both from an FY24 and a trend line which you can draw from there over the last 3 years.
Specifically on margins, I think if you look at our numbers, we started, Q1 was tough, but Q2 we had a improving profit before tax. Q3 we broke even. Q4 we've delivered a PBT in the black. Each quarter has improved versus the prior quarter, and that we expect to continue in the next 4 quarters coming. Number one. Number two, we've always said that every year we would try to expand our margins between 50 to 100 basis points, both at an EBITDA as well as an operating income and PBT level. And that medium-term outlook continues, and we expect to deliver that quarter on quarter.
All right, 50 to 100 basis points margin improvement. That implies that by FY26 you would be in the double-digit range when it comes to the EBITDA margins itself. You know what's interesting is that you guys have also been seeding some new businesses, and that's almost 9 to 10% of your overall revenue mix right now. So let's ask Ravi Prakash, do you have any incremental target on that one? What is the contribution that you would likely to see from the new business developments that was just about 10% in FY24 revenues?
So historically we've done between 10 to 12% of the closing revenue. So we expect to continue that trend. In fact, that is the number one focus of the company. If you look at it, we've been trying to grow organically through new business development. So we don't expect, in fact, if anything, we want to push that even harder. So going forward as well, at a minimum, we would like to do 10% of the year-end target through new business development and push that even more. And that's where, you've got the order pipeline up on your screen. That's what gives us confidence that we will be able to deliver that.
Okay, all right. Let's focus a little bit on the balance sheet. Post your IPO, the interest cost has come down substantially. I think you were guiding for 30-40 crores of interest cost reduction. Could you tell us what is the current debt in the books, and is there scope for further improvement? If yes, quantify it.
So before we went into the IPO, we had a gross debt of almost 1783 crores, and now it is down to 794 gross debt. So a couple of good things. Today, we do not have any long-term debt. So we had signaled in the IPO that we would use the proceeds to pay down all our long-term debt. We've done that. The debt that is on the books today is purely working capital. And in fact, if you take the cash into account, the net debt is just around 200 crores. We don't expect that to move materially over the next 12 months. And that's the reason, if you look at the Q4 interest cost, which is around 16.6, 17 crores, that's what we are guiding towards for the next 4 quarters. Any increase would only be because if there are any substantial projects coming on board. Otherwise, we are targeting very tight working capital management to get the maximum leverage from the one-time capital structure restructuring we've done.
All right, let's go back to Ravi Vishwanathan as well. Ravi, 30% of your revenues come in from India. The world is talking about India while you are getting 70% of your revenues from the rest of the world. So are you looking to increase that part of your pie? And at the same time, is there any differential in the earnings that you make from business in India and business abroad?
Yeah, I think our focus, of course, is to tap on the opportunities in India. There is tremendous economic activity in India. But I would also say that last year was a bit sluggish when you look at the overall opportunity in the supply chain side. And if you do a comparison with the peers, you'll probably see that most of the peers have been in that narrow growth range. We expect this year, hopefully post-June, to have a normal economic activity or even better, and we hope to tap onto it. The second part of your question, yes, there is, obviously India is really about volumes and trying to grow the business faster in India. So we would be willing to look at a slight dilution in the margin when we compare with the overseas business. In that way, I think the portfolio mix that we have, 70-30, 70% coming from overseas and 30% in India, really helps for us from a ability to invest in businesses in India. See,
do you have an aspirational target of? Yeah, do you have an aspirational target of how much should eventually come from India?
I think over the next couple of years, we would like that mix to go to 35-65 from where it is currently at 30-70. The nature of businesses outside of India are typically large outsourcing deals. We mentioned it about 3 quarters ago when we won a large deal with Centrica in the UK. That is going to open up doors for us for these large transformative supply chain engagements. And today, I can say with confidence that we are very, very well placed in handling those kind of large deals, which otherwise we were not probably being invited 2-3 years ago. Engagements like Centrica have placed us there. And I think the points that Ravi Prakash said, I think we are very fit. We have a fit balance sheet, and it positions us very well to participate in these large deals. And I can tell you that the 4,000 crore pipeline that you saw, we have quite a few which are very large deals that are the pipeline.
Take that point. Thanks a lot, both the gentlemen, both the Ravis, for stopping by, giving us an outlook on your business, a look back in FY24, but more importantly, a look ahead for FY25 as well, with a double-digit revenue growth that you're looking at in your integrated supply chain business, margin improvement of around 50 to 100 basis points, with net debt remaining at that 200 crore mark, and the eventual target is to perhaps increase your revenue coming in from India on account of the large orders that you won. Gentlemen, wish you good luck. With that, we'll slip into a short break now on the show. But as we do that, let's get you a small little programming note. Join us live on 31st May at 5:30 p.m. onwards. In fact, CNBC-TV18's Future Female Forward, the Leadership Circle, is underway. It's a transformative platform where leaders from diverse fields will venture beyond the traditional discourse and share stories of grit and determination, and also talk about the roads less traveled. This Leadership Circle is not just about business strategies and professional accolades. It's about delving into the depths of personal journeys of these trailblazers that we're talking about.
Welcome back. A few pharma names actually are slipping a little bit from the top. Remember, some of them have rallied quite a bit. Strides Pharma is under some pressure. That's come off the day's top. You have Glenmark Pharma that saw a big run yesterday. That's shaving off some gains as well. So that comes up for you on the screen. But I think one of the stocks that's done very, very well in this month is Jubilant FoodWorks. That's up 3.5% today. It's up closer to around 10% for the month itself. And as we speak, it moves to the high point of the day. So that's a stock to track. Persistent System has got something going for it as well. Yesterday, it was an outperformer in the mid-cap IT space. And today as well, from the day's low, that dip got bought into. So I think that one should be on your radar. Sudeep Shah of SBI Securities joins us for a technical check. Hi, Sudeep. It's been a while since we spoke. What's your view on the index? We're close to around 23,000 odd. The levels you'll be looking at on the index and the Nifty bank. Do you think it could get to that 50,000 odd mark sooner rather than later?
Good morning, Nigel, and thanks for having me on the show. From a Nifty perspective, if you see now post touching 23,100 yesterday, we had some sort of a pullback. But however, I feel now with only 3 to 4 sessions remaining for the exit poll and the results in the next week, I feel markets would bide its time and we could be staring at a consolidation range between 22,850 on the downside and 23,100, 23,200 on the upside. So I feel any dip towards 22,850, 22,900 could be a good buying opportunity. We have seen the long-short ratio of index futures also improving in the last few sessions, as well as strong put writing is visible in 22,800 and 22,900 strike prices. So that makes me believe that overall 22,800, 22,850 zone could act as a strong support. And from a bank Nifty standpoint, any move beyond 49,500 would lead the bank Nifty to a newer high, probably closer to 50,300, 50,500. So I'm waiting for that crossover as well as sustenance above 49,500, because even yesterday we saw that briefly it touched that zone, but there was a pullback from those higher levels. So bank Nifty specifically needs to sustain above 49,500. And on the downside, 49,000, 49,100 would act as a strong support.
All right. And individual stocks, what would you back right now, Sudeep, at current levels?
I like a couple of names now. The first one is Ultratech Cement. If you see Ultratech Cement, it had a decent journey in the last year from October to December. There was a good move, which was there up to 10,400. And post that, in the last 5 months, the stock slid into a period of consolidation now. But as we are speaking, the stock has crossed all its prior 5 swing highs of the last 5 months and is sustaining well above 10,300. So I feel the overall structure on the daily, weekly, monthly charts seems very good, and this could be bought with a stop loss of 10,150 on the downside and a target of 10,600 on the upside. The second stock that I like is HDFC AMC. Now here, even this stock had a decent decent move in the last 1 year, and since February 2024, the stock is consolidating between 3,600 and 3,800, 3,850. Today, we have seen a triangle breakout on the upside, and that is with volumes and a rise in open interest. So I feel overall, this stock could be bought with a 3,900 stop loss on the downside and a 4,150 target on the upside.
Okay, all right. Thanks a lot, Sudeep, for joining in and giving us your view on the index as well as a couple of those trading strategies as well. Well, let's slip in a short break. As we do that, here's a quick note for our viewers. The daily wrap of the top headlines will hit your inbox before you call it a night with CNBC-TV18's daily newsletter on LinkedIn, featuring the top 10 stories on markets, corporate updates, economic insights, and financial highlights. To just subscribe now, get the CNBC-TV18 Edge. Welcome back. Well, the markets, they're holding in the green, but there are quite a few stocks actually from the broader markets as well that are doing a thing of their own. Granules is another, pharma-related name that's moved a little bit lower. HAL, that's been a big mover in this month itself. I think it's up more than 25%. HAL now has slipped to the low point of the day, so keep an eye out on that one. And IGL, suddenly there's a bit of a volume spike on that one. IGL was in the red, now it's up closer around 1% or thereabouts. But let's focus on Nalco. That's still holding in the green, though it's come off a little bit from the top. Now, on the top line itself, there was a small miss in comparison to what we were working with, because the alumina sales volumes were a little less than what the street was anticipating. But the EBITDA number was superb. It came in at more than 1,100 crores. We were working with a number of around 950 crores. What caused this EBITDA to come in at the highest levels we have seen all the way since March 2022, which effectively makes it the highest we've seen in 2 years? Well, the costs were on the lower side. Your other expenditure that did decline, the cost of power and fuel as well did decline. And that's an indication that they're getting a higher amount of their total requirement from captive sources. From their captive coal mine, in fact, generated close to 2 million ton in the past year. And going ahead as well, that will only ramp up. That's encouraging when you have a decline on the power and fuel costs despite, producing a little bit more. What works for them in Q1 will be the aluminium business, because aluminium prices have moved up and they'll get higher amount of coal from their captive sources. Though for the past quarter, you had the alumina business that did very, very well. Aluminium business was more or less flattish if you look at it. But alumina business, which is effectively the chemicals business, is what they group it under. Out there was a bit of a beat. So Nalco's numbers, Mangalam, were good. Q1 could be a little bit better because of the higher aluminium prices and lower coal cost.
Take that point, Nigel. Thanks a lot for that. In fact, we've seen that in a lot of the metal names as well, like you've been pointing out, that while this quarter has been good, the next quarter is something that we'll all keep an eye out on. But can't keep an eye out on the next quarter for United Spirits, and that's largely because the management has spoken about demand moderation in the next couple of quarters, and that's largely because of the pressure that there has been on consumer wallets at the lower end in particular. Is there a problem at the premium end? Actually not. In fact, the premium trends are intact across the portfolio, and their luxury sales are now higher by about 11% as compared to pre-pandemic levels itself, and they continue to target double-digit volume growth in P&A on a full-year basis. P&A is prestige and above, which accounts for majority of their sales and margins as well. And for this year, they target double-digit revenue growth. Of course, understandably, will be more back-ended than front-ended. But having said that, they've seen no impact yet on demand because of elections, so that's a positive. Commodity inflation has seen some moderation. That also should come as a bit of a relief. But remember, the company has seen a sharp margin expansion in the last year, much higher than what they had guided for earlier. So that may not be replicated this year itself. So give and take everything, it is mildly positive, and that's something that's reflected in the stock price as well. Brokerages, what are they saying? Macquarie has increased their EPS estimates for the next year by 7%. In fact, not just this year, but the year after that as well, to factor in the fourth quarter beat. Well, ICICI Securities has kept its estimates unchanged, but they maintain their ad rating with a target of 1,200 rupees. On the obverse side, we have JP Morgan, which believes that, at current valuations, it's an underperformed rating for them because of the volatility that we're seeing in the near term, all the upside which is there is priced in at current levels. So which is why no more than a mild green is what we're seeing on United Spirits.
Okay, Mangalam. All right. Well, a couple of stocks I just want to point out. HFCL, the stock has now moved to the high point of the day. So that one should come up for you on the screen. It's moving on large volume. So that's the only reason we're pointing that out. And Sumitomo Chemicals, the stock started in the green with a gain of around 4-5%. Now it's up 8.5%. So big up move is what we're seeing out there. And Exide, a world of its own, one of the biggest underperformers a few years ago. And in a matter of 12 to 18 months, the stock more than doubles. Every dip is getting bought into, and now the stock is at the high point of the day, up close to 4%.
Take that point, Nigel. And you were speaking about, some stocks doing a thing of their own. And one of them that really stands out in this market right now is Hatsun Agro. Why do I say that? Because over the last few weeks, if you see, a lot of these dairy stocks have seen a bit of correction. And that's because Parag Milk had said that maybe going forward, milk procurement prices will increase, and they, have bottomed out. So if raw material prices increase for them, the margins would compress. And that's played out in a couple of these dairy stocks as well. So you have, Parag Milk, which is not doing too well. You have Dodla Dairy, which is not doing too well. In light of that, Hatsun Agro is the one which is actually outperforming. In fact, this month it has outperformed all the others in the industry, and that's largely because, one, they have their own milk procuring centers, so they don't get as affected by higher milk procurement prices. And secondly, they have a fair amount of revenues coming in from their ice cream business as well. Arun Ice Creams is what they sell. It's been a hot summer, so maybe that business will support them as against the others. So that works for them.
All right, Hatsun doing a big outperformance in today's trading session. For the time being, though, we'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.